Smith & Wesson designs, manufactures and sells firearms worldwide. The company offers handguns, including revolvers and pistols, long guns, such as modern sporting rifles, handcuffs, suppressors and other firearm-related products. And there are two reasons I want to take a closer look at this company. The first one is that this company is the newest addition to Norbert Lu's portfolio. And I did a video about him and his portfolio, so if you want to check it out, the link will be in the description. The second reason I think that this company can be an interesting potential investment is the fact that it is listed on the Magic Formula website. And I also did a whole video about the Magic Formula, so you can check that out as well. So let's see why one of the best value investors out there decided to put a lot of money into this business. First, who owns this company apart from Norbert Lu? Individual insiders, that is an X. It is 1.6%, and we would like to see a number over 2%, so that is close but not quite there. Insiders buying, that is an X. In the last 6 months, insiders are selling. But before that, there was a number of buys, so it is not such an obvious situation. And do super investors own this company? That is a check, but it is only Norbert Lu. And is he buying right now? That is a check. Norbert Lu bought his first shares in Q2 2022, and he added over 60% in the last quarter. And how is the financial health of Smith & Wesson looking? Return on invested capital, that is a check. It is 22.8%, and we like to see a number higher than 10%, so this is very, very nice. It shows that the management is doing a really good work. And free cash flow growth, that is also a check. It is 17%. And also here we would like to see a number higher than 10%. So far so good. And what do we know about net profit margin? It is a check. It is 17.9%, and the other companies in this sector have a margin of around 5.1%. So Smith & Wesson has a very strong position and a lot of pricing power. And now let's take a look at shares buyback. It is also a check. In the last 10 years, they bought back 28.4% of their shares. So that is another very, very good news. And the debt? It is also a check. They have a perfect situation concerning debt. They just don't have it. And we should always like such a situation because it's very hard to go bankrupt when you have no debt. So that is really impressive. I mean, this company is looking very interesting so far. And does Smith & Wesson pay any dividends? Yes, they do. The dividend yield is 3.4%, and they are paying 30 cents per every share. But of course, dividend yield is not the only thing that is important when we look at dividends. Let's see the payout ratio. And that is an X. It is 12.4%, and we want to see a payout ratio somewhere between 20 and 50%. So it's not bad, but it could be slightly higher. And what about dividend growth? It is an X. And not because the dividends are not growing, but because they started to pay the dividends in 2020. So we just don't have enough data to know what exactly is the idea behind the dividends. Will they pay them only when the situation is great, or are the dividends staying with us for years? We'll just have to wait and see. Okay, so now let's value this company using a discounted cash flow formula. We will have to estimate the growth of Smith & Wesson for the next 10 years, and as always, we will make 3 scenarios: low, medium, and a high one. So In the low scenario, we will estimate a growth of 0% for the next 5 years and then 3%. In the medium, 3% and then 6%. And in the high scenario, 5% and then 8% growth. So, with such estimates, the intrinsic value in the low scenario is $28, $35 in the medium, and $41 in the high one. But we have to always add a margin of safety. I use a 30% one because that is the number that makes me comfortable, and you should always find your own margin that makes you feel safe. And with a 30% margin, we get $20 in the low scenario, $25 in the medium one, and $29 in the high scenario. And the current price is around $12. So it is all in the green. Even with very low estimates in the low scenario, the current price is still substantially lower. So it all makes sense. Norbert Lu invests only in his best ideas. And this company has a very good financial health, big pricing power, no debt, and is substantially cheaper compared to its intrinsic value. And there is just one thing every one of us has to take into consideration. The question is, do I want to invest in a company that makes firearms? So let me know in the comments what is your opinion on this company. Maybe I missed something that changes the story in the long term. But as always, remember to do your own due diligence before making any financial decisions. That's all for today. Thank you for watching, and remember to subscribe to the channel and like the video if you found it interesting. Thanks again, and bye-bye.